Hi everyone, Gianni DePoce here with you for Theo Trade, and today is Tuesday, October 28th, 2025. We're seeing stocks hit new all-time highs yet again today. We're seeing the upside resolution from the nice technical pattern that we have been observing over the last few weeks. We had that little bout of volatility a couple of weeks ago that shook out some of the weak longs, and now we got this squeeze up to new all-time highs. So as a rule, new all-time highs are bullish price action. We're seeing leadership come from the right places so far during this rally. Last week, technology emerged once again as the top performing sector on the week. And this represents a stark change from what we've seen over the last month or so. There were one-off instances here and there of sectors like utilities and healthcare leading at the 1 week interval, but seeing XLK and technology uh, solidify its place as the 1 week leader last week gave us the risk on signal, the signal that the market's going to reward us for taking risk to the upside. And then on Sunday, we had the announcement from the Trump administration that a deal is in the process of being worked out with China. Of course, we do have that meeting between Trump and Xi Jinping on Thursday, and that's going to come after tomorrow's rate cut from the Fed, which looks to largely be a non-event at this point. Everyone in the market knows that the Fed's going to be cutting rates by 25 basis points or 1/4% tomorrow. But we actually just saw the Nasdaq overtake the Dow earlier today in terms of leadership to the upside. And this morning you had that announcement with Microsoft and OpenAI, so that's looking pretty bullish. Big gap up on Microsoft here. It is fading. It's interesting how we're pretty much back into that level where we had that massive fade in Microsoft that actually lasted quite a few months. I mean, this chart looks bullish. Don't get me wrong. But let's see if we can get a little bit more sideways action. I am looking for quite a bit more upside here in Microsoft, at least up into the high 500s, low $600 range. But we continue to see semiconductors do well, not outperforming the S&P or the Nasdaq today. That's fine because it's been so strong as of late. Nvidia looking very, very good, up another 3.5%, give or take. Remember, I've had a target on Nvidia around 230 for many, many months, and now we're getting this resolution from a very similar pattern, by the way, to what we've observed in the S&P 500. So ask yourself this question, if the largest stock in the US, really, the largest company in the world, goes up another 10%, do you think that's going to be a tailwind for the overall market or not? Well, the answer is undoubtedly yes, it would be a tailwind for the S&P 500. So this is looking good. When it comes to NVIDIA, other semiconductor names that we've been long include Advanced Micro Devices and Micron. Those have been $1 million challenge names, live chat room names, seeing a lot of good setups in that space. But earlier today, we actually booked a very nice 35% gain on our initial position in Arcutis Biotherapeutics. This is actually a Trinity trade name, and we had the signal to get long after it broke above the freeze point in early September. And the stock made us wait a little bit longer than we're used to, but we exercised patience. We exercised good judgment. We didn't try to force the issue. And then, we had earnings, very positive result compared to expectations. Stock gapped up over like 20% at the open. It continued to rally. Our sell orders to take some chips off the table hit at 23.30, gave us a 35% gain. And now we have a plan to continue holding this stock as it looks to be in the early stages of a new bull market. And I've been talking a lot about um, the new theme when it comes to artificial intelligence. I think we've heard the story already with semiconductors and data centers and kind of beat that story to death. But I think the new story when it comes to artificial intelligence, especially as we go into 2026, is going to be biotech and healthcare. How can artificial intelligence not just reduce overhead costs and replace workers that's not really benefiting the public at large? It's benefiting, shareholders of company and, the bottom line of a lot of these names. But in the healthcare space, we could actually see the fruits of AI really start to bear themselves for the population at large. So I think this is a very exciting story. It's a story that I think will really take hold in 2026 and beyond. Because you can see here that the healthcare sector has not made a new all-time high this year. The biotech sector, the biotech ETFs, XBI and IBB, have not hit new all-time highs since 2021. So we've already been positioning for this in the Trinity trade because the model's been picking up on these increasing flows into the sector, coupled with lower interest rates and a more accommodative Fed and just, regulatory reform and I think just a pro-business climate, we could really see this sector come back to life. In fact, it's why I issued yet another trade setup in the biotech space for Trinity Trade members earlier today. So that's looking good. I like what I'm seeing play out in biotech. And really, tech in general still looks strong. Tesla is trying to close today at its highest level of the year. We haven't seen a close this high since late December of 2024. And, we did get past earnings. I think that rate cuts are going to be very, very good for Tesla. It's more than just a car company. I'm actually more excited about the robotics story, the artificial intelligence story, the battery storage story here with Tesla. Cars, I think, are just going to be a sideshow. Going forward, I think the bigger story is robotics, especially if and when these robots start assembling these Tesla vehicles. So Tesla's looking strong. You had that news earlier today of Amazon laying off 30,000 employees. The stock is up on that news. It's really unfortunate that's happening just before the holiday season, but we do have earnings coming up in a couple of days. Be sure to watch this one because Amazon hasn't hit new all-time highs in almost 9 months. So it hasn't been since the beginning of February. Earnings will be just a few days short of 9 months. And so this could be a catalyst to power this stock onto new highs. We actually did take a trade in the live room on Amazon. Actually, Matt, if you guys have had the pleasure of seeing Matt join us in chat, we were actually talking about it, and we took a trade on Amazon here on the long side and seems to be working pretty well so far. Apple hitting new all-time highs here. So, Mag 7 names across the board are looking strong, and this is exactly what we expect to be playing out at this stage of the market cycle. Let's go ahead and take a look at precious metals. We are finally getting the long-awaited correction. So both gold and silver are down notably off of their all-time highs. Silver getting a little bit of a bid today after dropping to a new low. I don't think that the decline or the pullback is over yet. That being said, probably a bit of an exaggeration to the downside here in the near term. Could have a couple of days of some upside action, especially with rate cuts coming. Rate cuts will be bullish for precious metals. And I think we will see the bull market continue into 2026. But I'd like to see a little bit more downside, perhaps a shaking out a little bit more of the bulls. Remember that just a couple of weeks ago, you saw videos of people lined up at jewelry stores, bullion shops, looking to get their piece of the action. Well, that was a telltale sign of a high being complete, a temporary high, I think, in gold and silver. In fact, was discussing this live today with Blake Young. I'd like to see gold actually drop into like the 3,600, 3,750 zone for a bottom. So we're not that far away from there. And that doesn't automatically mean we're going to be right back to new all-time highs. A lot of the rally in gold, I think, was in anticipation of rate cuts and just monetary instability. You take a look at bonds; they're looking very bullish going into the Fed day tomorrow. So I am looking for a big breakout in bonds. The 10-year note, the 30-year bond. I'm looking for new highs on the year, actually sooner than later, and that's helped by the fact that we have yet another lower high in crude oil here. I have been a very loud and adamant bear in crude oil. We have another lower high that reinforces the trend in favor of the bears. So I'm not just bullish everywhere I look, guys. There are markets that I am bearish, and in many cases, I just, stay away from them entirely. But crude oil, tell you what, we lose this, $54, $56 support zone. I'm looking for a drop into the low 40s. I'm actually becoming even more bearish on crude oil. I think that drill baby drill is going to be overtaking print baby print. Yes, we have oil prices going down that could add some more cash into the consumer's pocketbook. But the problem is, you have UPS, Amazon. We're talking like 70,000 jobs that have just been, erased. And so, what good are lower gas prices? What good are potential cost savings for consumers if there are no jobs? Therein lies the problem. So we do have to continue that. Is this drop in crude oil a function of just more oil supply in the market, or is it a function of consumers losing some demand because the economy is slowing down? Time will tell. Let's go ahead and jump over to cryptocurrencies. Good day so far here in Bitcoin and Ethereum. We haven't taken out the high from yesterday. We had the nice rally over the weekend after the trade deal news. And I do have the setup here for a bottom to be complete. So I'm sticking with my call of Ethereum rallying to $8,000 per coin at some time in 2026. Bitcoin, I don't really have much expectations for it beyond 150. We're not really that far from that. And I'm seeing some other really amazing opportunities come about in this precious metal or excuse me, in this cryptocurrency sector, which I think would actually add a lot of reinforcement to the idea that you're being rewarded for taking risk in this market. After all, the VIX is pretty much, low. It's up a little bit today, but the VIX is still back into not so much of a danger zone. We'll see if that creeps back higher. But I do think the playbook, from the Trump administration and the Fed, weaker dollar, lower interest rates, tried to grow our way out of this fiscal or government debt debacle that we've been dealing with for decades. And yeah, we'll see if we get any news on the shutdown as well. So as of right now, no deal is made. But that's what I got for today, everyone. Thank you so much for tuning in. Hope to see you in the Theo Trade chat room, and take care. Until next time.